Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today again we will take a look at the Great British Pound because the Greece epopee still is continuing, and actually most investors already are tired from this endless story. This discussion of the Greece problem reminds me the talks on the US debt sale every year. I have made the comment on the Greece in our forum. In two words speaking, the major question around Greece is not the economy of this country, but mostly the geopolitical role of the country inside of the European Union. Because it's obvious that no reforms will be able to provide and generate additional 230 and 300 billions of euros in the nearest period. So no reforms will be able to rise the economy of the Greece at such pace and the level that when the economy will be able to generate this cash to pay them out to the IMF and the Germany. That's obvious. It means that the only way how European Union can hold the Greece inside of the Union is just pay this sum instead of the Greece. So they have paid it for first time when they have provided these loans, as the IMF, as the European Union countries, mostly the Germany. And now they will have to pay this money for the second time, because they will have to return the sum to the IMF instead of the Greece. And the real price tag here is not the economy of the Greece itself, because this is really the poor journey to trying to rise the Greece economy. But the real price that European Union trying to calculate is whether the geopolitical role of the Greece are worthy of this 200 and 300 billions of euros. That's the question they will try to resolve. Because if even they will provide the Greece the 2 billions of euros to pay out for the IMF in the end of June, what will happen with the next payment? Whether it will be again the same story and the same discussion, the endless negotiations, where this will be just a tactical solution that will not resolve the core of the problem. And that's really what they will try to understand. Whether it makes sense to pay the 300 billion euros to keep the Greece inside of the Euro Union. That's the major price tag. That's why currently we have no solutions on the Greece. Let's see what will happen again, because although yesterday we've got some temporal relief that the officials, Euro Union officials, have announced that the Greece provides some corrections to reforms that have been discussed previously, and they see the positive signs, but no real solution, no real agreement have been reached yet. So let's keep watching what will happen. That's why the discussion of the euro currency right now is not very interesting. Technically, yes, euro currency has hit the target. I mean, the ABCD 618 minor extension has broken through the wage pattern that we have discussed and turned down. But this situation could change very fast, depending on what will happen on the next stage of the negotiations on the current week. That's why let's take a look again on the Great British Pound by far. Our major concern on the Great British Pound was whether market will continue move to the 160 target immediately, or it will show first minor retracement and after that will continue move higher. And looks like the cable has chosen the second way. The reason for that is very simple, because market stands at daily overbought. I do not have it on this chart, this line, but you probably remember, if you have read our weekly research, you know that we thought that this should happen because market stands at overbought. And this retracement could provide us the chance for taking the scalp long position if market will form, say, Jordan Brent buy. because pattern, because here we have not bad thrust up. It's 1, 2, 3, 4, 5, 6, 7, 9, 8, 9 candles to the upside. We need to see that market will close below the 3x3 moving average and hit at least the 56.45 area, this first fib support area. Here we could drop our time frame chart and look for a possible taking the long position on this brand body when the market should reach the 160 target. Why it has to reach 160? If you have read carefully our weekly analysis, you see that market right now stands at the strong resistance. And we expect in the medium term perspective some significant retracement on the Great British Pound to the downside. But this retracement should be triggered by some patterns that should stand on the on lower time frame charts, such as daily. And you can see that on the daily chart, market is forming two patterns, A, B, C, D pattern, and this butterfly. That's itself, that is the reversal pattern per se. So, and both of them have the targets around 160. That's why we think that these patterns could become particularly the patterns that we are watching for, that could become the triggering patterns that will start this retracement down on the weekly chart. This is the response on the strong resistance. That's why we think that the major retracement down will start only after cable will hit 160 targets. But since market right now stands at the daily overbought, it can't just immediately continue move to the 160. It should exit from this uncomfortable overbought condition by some retracement, and after that should continue move high and hit these targets. That's our trading plan. The first stage in this trading plan is the trying to play on this retracement down before action to the 160. And particularly speaking, we are watching for this for possible brand body buy. If you'll take a look at the 4-hour time frame chart, you'll see that this level, this fib support, also coincides with the weekly pivot support one. And that's very comfortable for us, because we know that the pivot supports usually holds the retracement, bearish retracement, downward retracement in the upward trend. And from that standpoint, this also will be the indicator. So if market will hold here above it, that keeps chance on further upward action. And in general, this makes this level stronger. So this is the fib support accompanied by the weekly pivot support one. Right now, as you can see, reaction of the market on this weekly pivot point. So it has tested it, bounce up, now return it back down. Let's see what will happen. Also, guys, here we've got something that looks like the double repo pattern. So you can see that is thrusting up, close below the 3x3, close above, close below again, and market starts move down. Personally, guys, I'd not like to trade intraday double repos because they often fails rather than work properly. I prefer to trade double repos on the higher time frame charts, on the daily, on the weekly, because they are just more reliable there. But sometimes on intraday charts, this also could work. And finally, the last moment. As the alternatively, the another pattern that could theoretically lead market to the 160 is the double repo sell failure pattern. For example, if market will form here the double repo sell pattern instead of the brand body, and if this pattern will fail, that also could be the bullish signal, because both of them, as the brand body buys the double repo sell failure, could lead market to the 160. But to trade the double repo sell failure will be not very comfortable, because it's really too few room between the current market and the target. Now imagine that market will fluctuate here and to form the double repo, then it should fail, and it will be very small distance to take the position. That's why I still prefer to get the brand body here. So let's see what will happen.